Silver sends shockwaves with a big drop, U.S. bond sell-off to push it lower. This crazy world is shifting the market for silver in a way we have never seen before. In this video, I'm going to break this down for you and show the bond sell-off is changing our silver price. If you like this content, hit like and subscribe. It really helps get this information out there. Let's start. This is from Reuters. U.S. bond bulls lean into latest sell-off despite inflation scare. A sharp sell-off in U.S. bonds so far in April is prompting some investors to consider allocating more funds to the asset class to lock in higher yields ahead of interest rate cuts by the Federal Reserve, a prospect that remains investors' base case despite U.S. economic resilience. This is not a shock, as the inverted yield literally pushes people to go in. Let's continue with the article. Treasury yields, which move inversely to prices, have soared in recent weeks after a string of solid economic data and 3 consecutive monthly inflation prints showing a rebound in price pressures pushed out expectations of when the Fed would start cutting rates. The benchmark 10-year yield has approached 5%, a level last touched in October for the first time in 16 years. That's the times we're living in. I mean, 5% in 16 years, right? I mean, this data really speaks for itself. Let's continue. But for many, lower bond prices are an opportunity to increase so-called duration, or the interest rate sensitivity of a bond portfolio, because the U.S. Central Bank has signaled the next likely move in interest rates will be lower if that happens. Fund managers increase duration by buying bonds across the curve that benefit most from an interest rate move. When interest rates decline, the value of bonds increase. This makes sense because people are looking for a better return on their investment. That's what they want. Sometimes we look at this difference between people putting their money into silver, right? Like these rounds that I'm holding here, and the other option of real estate, or the other option of treasuries. We looked at almost as if it's a marketing tool, right? But it's really not. This is just, history shows us that people figure this out on their own, right? The public sees that, oh, yields on interest rates are strong, I'm going to go there. Yields are tightening, they're dropping, oh, I'm going to go into precious metals. This just happens. But the crazy part of what we're seeing with silver is that silver has, for the past few weeks, has been fighting against that. I mean, really rallying against it until we've seen this drop now. Okay, let's continue. This article says, bonds rallied late last year when inflation was cooling and the Federal Reserve signaled it had likely reached a peak in its interest rate hikes, emboldening bond bulls who had already loaded up on fixed income as yields rose. This was the time period where silver price remained stagnant. Remember this. This is when silver price remained stagnant for a painful stretch of time. But today, silver has been moving up. And that's why this is so important, because it is entirely possible that silver could rally this week and push through and follow the pattern it has been doing. It has been following for the past weeks. And that is going along with treasury yields, going along with the strength of the dollar, where historically it's the opposite. I mean, everyone in this silver stacking community, our heads are all spinning with the past few weeks, which is incredible, because as we've stacked this silver for, if you've been in this game even for the past 2 years, 3 years, you've been really quite bored with silver. And I know I'm not alone in that, because I see it in the comments, and I see it in other videos. Silver is stagnant for so long. And now, bam, we get this hit with gold, right, about 5 weeks ago. Silver, of course, lags a little bit, but then it follows along. And strangely, there has not been a correction. And I do not see, I'm not a financial advisor, I'm just a silver stacker. I'm just telling you my experience stacking silver. I've been in this for years. I don't see this dip, this drop today as the correction that we are expecting. I don't. I see silver, especially later today and tomorrow, I see the market pushing silver up. And let's continue with the article before I tell you my opinion. The article says, since then, however, things have not played out as expected. Inflation is sticky, as we were just saying, and Fed officials have repeatedly signaled that there's no urgency for a less restrictive monetary policy. That's been frustrating everyone. Some are even open to hiking again if inflation rebounds. I mean, that is really not what we're looking forward to. Year-to-date returns on treasuries have been negative at minus 3.8%, according to the ICE Bank of America 7 to 10 year Treasury Index. Even for investment-grade corporate bonds, which have recorded massive demand this year as investors seek higher returns than safer treasuries, returns have been minus 2.3% so far this year. Let me just say that again, because this is really important. Even for investment-grade corporate bonds, which have recorded massive demand this year as investors seek higher returns than safer treasuries, returns have been minus 2.3% so far this year. So you're really not getting what you hope to be getting when you go into these. There is lower confidence, according to this article. It says, still, as yields creep back to 5%, several bond investors say they're not panicking and favor interest rate exposure, even if holding those positions could be painful in the short term. We like the duration trade, and we don't see rates going up that much more, said Alex Morris, Chief Investment Officer of FM Investments. Being a little early to that trade is okay, and right now you get positive yield because actual coupon rates are high enough that you're getting paid to do that rate. Now, for those of us who are not in this game of trading bonds, the coupon rate is just how much you're making, in increments. So I'm just going to explain this in English. As people are going into these bonds to get more of a return on investment, typically that pulls from silver, it pulls from gold, it pulls from precious metals. And so we've seen a dip today. But again, I don't see this as the big correction that we're waiting for. Really, what typically would, historically, if we look at the sequence that silver follows, the progression that silver follows, typically it will follow gold, it will jump up, and then really quite shortly after, we'll see a strong correction. And we have not seen that yet. Silver is still pushing to $30. And I'll tell you what I see silver doing this week. I see tomorrow, Tuesday and Wednesday, I see silver bumping up again really strong. And I see silver continuing to next week, pushing up, easily breaking the $30 mark and bringing us to that all important level, which is $35. Now, you have to realize 35. I'm just going to stack these up, these silver rounds. Right, this is about a tube of silver rounds. If you bought this this time last year, you're paying around $25 an ounce. So when we get to that $35 an ounce level, that means you're paying $200 more per round, and likewise, you're making $200 more per round, right? You're profiting more. I mean, we don't look at silver as profit really as a silver stackers. We're looking at to hedge inflation, and we're looking at as a safe store of wealth. Some are even looking at as barter. But let's face it, we're putting a lot of money into this. So yeah, when the price goes up, it absolutely, we could see it, you could use that word profit because your holdings, your wealth is increasing, and everybody smiles at that.